In the last video, we prepared a statement of cash flows indirect method for flip and flops. So the indirect method, and basically what the indirect method means is that we don't show cash from revenues or cash paid for inventory. We start with net income. We make relevant adjustments to come up with cash from operations. So we come up with this number indirectly through a reconciliation process. The direct method does it a little bit differently. The direct method, we are going to specifically report cash from customers or cash sales. We're going to show cash paid for inventory. And we're going to show cash paid for other expenses. And so when we get done, we basically have prepared kind of a mini income statement, that is all cash based. Okay. Now, but this is only going to affect the operation side, the operating section of the statement of cash flows. If we prepared the investing section for the statement of cash flows or the financing section, they are going to look exactly the same, whether we prepare them using the direct or indirect methods. There will be no difference. And there will be no difference in any of the totals in any of the sections. So all totals for all sections, including the operating section, will be the same. So it's one nice thing about that is we can prepare the statement of cash flows in direct method, and then if we do the direct method, and if we do it correctly, our cash from operations should be the same under either method. All right? So let's start this process. So if I'm going to avoid putting all, so we're not going to prepare, what we're not going to do, we are not going to do the investing section because we've already done it. It's going to look exactly like we did in the indirect method. And we're not going to do the financing section, again, because it's going to look just like it does in the indirect method. And we're also going to avoid the labels just because I don't want to run out of space. So if our first top line item is cash from customers. So the process here, and actually to make this easy, is, let me blank this and let's go back and look at our original statement of cash flows here. So the two things we're going to do, we'll always start out with the revenues, or we'll always look at the income statement and pull one number from there. And then we'll look at our statement of cash flows indirect method, and we're going to pull one number from this layer, or as many numbers as relate to that section. So we're going to come here and we're going to pull from here. We will ignore two accounts. We will ignore the net income account, and we will ignore depreciation. All these other numbers are fair game. And let me show you what I mean here. So if we go, if we think about cash to customers, so what do we have? We're going to have revenues from cash from customers, and that was 870. Well, what other balance sheet account relates to cash from customers? It is accounts receivable, right? The accounts receivable account relates to cash from customers. Let me color this for you. So, and that number is a -50. So, if we put in the change in accounts receivable, I got to keep flipping back here. So if we put the change in accounts receivable for this as a -50, then our cash from customers is $820. And I'm going to put my $820 as cash from customers right here. Okay. Looking at the next line item in the income statement, I'll box this off. The next line item is cost of goods sold. And that number is 510. And if, since it's an expense, I'm going to put a negative around it. This will help me keep the signs on everything correct. And what accounts are going to relate to cost of goods sold? Well, when we did some earlier activities, we found that there are two accounts that are going to relate to accounts of cost of goods sold. Primarily inventory, our change in our inventory account, and the change in our payables account. So our change in inventory is a positive 55, and our change in our payable accounts is a positive 20. So if I go back and look here, so I'm going to put under change in inventory, which was a positive 55, and my change in payables, and that was a positive 20. I'm going to add all those up, a negative 510 plus a 55 plus another 20, and that's going to give me cash for inventory paid, for inventory, of a negative 435. I believe that's right. Yep. So cash, let me switch colors here. Cash for inventory. And we're going to say that's a negative 435. Okay. Box this off here to keep everything clean. Let's look at our income statement. What other accounts are we missing? Operating expenses. So our operating expenses, and I'm going to box this, put this down here. So our operating expenses, they are 270. If we want to blank this and go back to our statement of cash flows here, our operating expenses are the only thing we have left really is our wages payable. And you can see from the little boxed information included on the activity that wages payable are included in operating expenses. So we're going to take this negative 40 then and include it here. So negative 40 in wages payable. And so the sum on this, again, I should have put brackets around this operating expense because operating expense is an expense and it should be negative. So my total then here should be a negative 310. And this would be, I'd put this cash paid for operating expenses. Okay, so put that in my statement of cash flow direct method, cash paid for operating expenses, and that's a negative 310. If I add up those all, so a positive 820, negative 435, and negative 310, I believe that sum equals 75. And that's my cash from operations. And if you look back to what the total was cash from operations in the indirect method, it is equal to that. So we have achieved what we were looking for. We did the direct method, and the result came out exactly the same, which gives us a lot of confidence that it is correct. So this is the statement of cash flows direct method, primarily focusing on the operating section for flippin' flops.